What's up you guys and welcome to the Crude Crypto YouTube channel. And in this video I will be highlighting the existing similarities between the 2017 bull run and the 2020 bull run. Will we see a complete repeat of the previous bull run price action? Currently we are well on track. I will also look into if we can complement this idea with data science models and where we are currently in our cycle. If you're already excited for the video, please like and subscribe. Because I'm a really small channel, these actions have a major impact on my channel. Without wasting any more time, let's dive straight in. While comparing these two bull runs, we can see very similar price action to each other. In the 2017 bull run, we saw two major dips before one blow off top, and currently we are seeing approximately again two small dips. When we copy this price action and paste it over the previous price action, we can see that the price action overlaps really well with the current price action, mainly when we change to the daily time frame. Here we can see the similarities of the gains and pullbacks overlapping each other. If we zoom in a little bit more, we can see that we are currently testing the previous high, which is around $85,000. And historically, after breaking these kinds of levels, we blast off to new highs. This also happened in the bull run of 2017, when after breaking the previous high, we blasted off to new highs. On the 4-hour time frame, we can see similar price action forming compared to the previous breakout. First, we see a correction, and then a recovery of the losses, and possibly at first a small pullback before breaking this resistance. Currently we have recovered all the losses from February and are testing this range. If we would see a similar breakout after breaking the 85 to 60k range, if the following breakout would act similarly to the previous breakout, we should see a pattern like this. When we copy the previous price action and then paste it on the current price action, we can see this price prediction for the future. Again, this is only a fractal and previous price action is not a guarantee for future price action, but using fractals is very nice for imaging possibilities. After breaking the 60k range, it is possible that we would blast off straight to 70k. There we would see some consolidation before again breaking out to the 80k level. These levels are also confluent with the Fibonacci resistance ranges. And therefore the $70,000 and the $80,000 range could act as strong support. In general, numbers with many zeros like 70,000, 80,000, 90,000, 100,000 are strong psychological resistance levels. Because people have the habit of thinking less exact, and therefore they have more feelings around nice round numbers. If the following breakout would be similar to the 2017 breakout, we would see a blast off before finding resistance around 95 to 100,000 US dollars before having a major correction. This correction would then be equal to around 28%. To further analyze the similarities between the 2021 bull run and the 2017 bull run, we need to dive into some data science models to complement these thoughts. Let's look at the behavior of holders. In this chart from Glassnode, which by the way is tweeted by Raphael Schulzecraft, we can see that in mature stages of bull runs, in the exponential bull run phases, we see the amount of 1 and 2 year unmoved coins decrease. This is also currently happening. By comparing these two cycles, we can see that we have much more room to decrease before a major market top is formed. During this point in the previous cycle, which I am comparing to this point in the current cycle, we started to see that the 3-year hodl wave was decreasing over time and reached its bottom when the market peak was formed. However, currently this amount is still building up, which shows confidence from long-term holders. Therefore, I could conclude that we have more room to grow in terms of price. As discussed in my previous video, I'll show a pop-up right now. Open this in tab if you want to see more context between the following metrics I'm going to show. As I discussed, the pool multiple, which is an indication of miner revenue, is near the red zone of overextension. If we currently would break the 60,000 US dollar level, this pool multiple value would go up and therefore reach the red zone. When the pool multiple value reaches this red zone, this indicates a market top, which is commonly followed by a stark correction of around 80%. As I said in my previous video, we are seeing a trend of overextension values, which is decreasing over time. Therefore, if this trend would continue, I would guess that we would see a market top or a stark correction after reaching a pool multiple value of around this range. This range is very dangerous and deserves its attention. At these ranges, I would be incredibly cautious. So be prepared. Make sure that you secure your profits. You don't want to be holding coins when the new bear market starts. The same can be said about the MVR Z-score. We are really close to this red zone, which again historically indicates market cycle tops. Therefore, exponential price appreciation could send us into this red zone, which again indicates a market top, which is often followed by a really stark correction. If we compare the previous run to the current run, we can see that the MVR Z-score has had 3 tops before having a major top, and therefore also 3 peaks in price, which were followed by small corrections before having a major peak, which was the end of the bull market. Currently, we already saw 2 of these peaks. We can also see that these peaks are more close to each other, which signals more volatility. And therefore the third peak could even be compressed into this one large blow-off top. When price appreciates and this Z-score reaches this red zone, the risk of holding increases dramatically, and therefore I would be really cautious. If you want to stay informed about these metrics, consider subscribing. The end of bull markets are commonly followed by 80 to 90% corrections, so be prepared. At last, the log growth curve indicates a peak around 100,000 US dollars. However, we don't need to hit this valuation in one straight line. Corrections are really healthy in a bull market and they reset the values of the previous shown metrics, which leaves us more room to grow and therefore makes us able to hit higher prices. There's also a possibility of developing a double peak formation like in 2013. I will dive more deeply into this comparison in a future video, so stay tuned. On my previous video, this architect asked me if 100k is the final top. At first, the upper band value is dependent on time. As you can see, over time this value increases, and therefore no static price can be extracted from this. The time factor would certainly play a role if we would see a double peak formation like in 2013, giving us much more time to increase the upper band value. I'm a bit skeptical about the reliability of the upper band price. Since the upper band is developed on these 3 points, which again only are 3 data points, which statistically doesn't give much certainty on the exact price prediction. And therefore I think we need to combine these multiple metrics to form one conclusion. And therefore I cannot give a prediction solely on this model. Well, thank you all for listening to me and sticking up till the very end. If you're interested to obtain updates on these metrics and more, consider subscribing. And like if you enjoyed this video. Because I'm a really small channel, these actions have a major impact on my channel. So please do.